Vitale, American Retirement Advisors with the Gradient Investments Weekly Market Update for the week ending April 1st, 2024. We hope you all had a very happy and blessed Easter. Happy Easter week, and let's get into what's going on. So stocks ended the week and the first quarter on a positive note, with most of the indexes up. The S&P led most indices. Year to date is up over 30% in the past year. Bonds have not fared as well, with the interest rates at 2, 10, and 30-year treasuries have risen from the end of 2023, but as a result of bond performance, which is the U.S. aggregate bonds, are down slightly year to date. We should start to see some interest rate movement before the end of the year for sure, but we'll keep going on that. Let's go upcoming economic releases. The market will be watching job data this week with unemployment rates and payroll growth and average earnings growth reported on Friday this week. So tomorrow we should see what's going to be happening there and how the market will respond. As the second quarter begins, the biggest question for stocks is, can we keep this going? The economic data has been resilient and inflation has been a little stickier than expected, which we knew was going to happen, which has kept the widely anticipated Fed Reserve rate cut from happening, which we know there's probably talking third quarter, but we'll see. Our expectations for the economy and company fundamentals have not changed much. We expect continued U.S. GDP growth. Albeit showing from 2023, we can expect the unemployment rate to begin to rise into the 4% plus territory. And we also believe inflation is still on course to be at normalized levels by year end, which has changed. What has changed is the market performance. Despite lower expectations of Fed cuts, the S&P 500 is up substantially in 2024, and valuations are now at very high levels. In Gradient's opinion, prudent risk management and rebalancing is favorable over significant increases in risk for client portfolios. So we're always looking to make sure we keep in line with your risk tolerance. Let's talk about some of the stocks in the news. Home Depot, which is owned in the G50 portfolio, announced that they intend to acquire SRS Distribution for $18.25 billion. Home Depot looks to SRS to accelerate their growth with the residential professional customer. Then Amazon, which is in the Core Select portfolio, added an additional $2.75 billion into Anthropic, which is a startup that specializes in generative artificial intelligence, which of course is all the buzz. Amazon now has invested a total of $4 billion with Anthropic over the past year. So as we say, the market is up. We were calling for an 8 to 10 up. We're already up 10% this year. So we still think that we still have some legs. However, we're talking about the interest rates. Remember, the market kind of priced in 3 interest rate cuts or 5 interest rate cuts this year, which we're already in April now. We haven't seen an interest rate cut. We're still seeing a pause. We're also seeing inflation still higher and ticking up higher than we anticipated or than the Fed anticipated. We kind of knew that it wasn't going anywhere anytime soon. So that's what they're trying to do, is they're trying to increase the unemployment rate, not cut rates because they don't want more inflation, but we're probably going to see a rate cut probably, I'm going to say the late second to the third quarter is what anticipated is going to happen. We'll see how that goes. But other than that, that's all we have for today. So thank you so much for being part of the ARA family. If you'd like to get a hold of us, you know how to reach us, 855-756-5700. Visit us at aradvisorsinc.com. God bless you. We'll see you again next week.